How will the IRS know that what you just claimed on your tax return as a write-off is actually a legitimate write-off? Like, let's say that you go buy a gun for your business and you write it off on your taxes. How does the IRS know that that's a legitimate deduction? How does the IRS know that the G-Wagon that you just purchased is a legitimate deduction? Well, unfortunately for you, the taxpayer, the IRS doesn't need to know anything. The IRS doesn't need to build any proof against you for filing false claims as deductions on your tax return. That is because the burden of proof is on the taxpayer. Meaning that if the IRS challenges anything on your tax return, the burden of proof is on the taxpayer. The taxpayer is the one that has to prove the legitimacy of what's on their tax return. Basically what that looks like is you file your tax return and say that you have $100,000 of a deduction on there, and the IRS wants to audit you. So then what they're going to do is they're going to send you a notice. You're going to open the mail and you're going to read, the IRS has made this adjustment to your tax return according to this deduction. Your claim was a $100,000 deduction. The IRS changed it to zero. Here's what we need for you to prove your number. You have 30 days to respond, otherwise you lose your right to claim or argue whatever with our position. So yeah, the IRS doesn't have to prove anything. You do.